Why does a small community often hold such a disproportionate amount of financial wisdom? To understand this Shekel strategy, we must first look past the money and into the culture that nurtures it. The first secret lies in the Jewish view of education as the ultimate high-yield investment. Knowledge is the only asset that cannot be stolen and does not depreciate over time. Historically, learning was not just a religious duty, but a survival mechanism. By prioritizing literacy and financial education early, the community builds a base of human capital. This brings us to the second pillar, the Gemach or interest-free loan fund. Imagine a system where the community lends to its own members without seeking profit from the debt. This interest-free model prevents the trap of predatory lending that destroys many low-income households. It is based on the biblical concept of Gemilut Hasadim, or acts of loving kindness. This creates a safety net that empowers individuals to start businesses or buy homes. But this system relies entirely on a foundation of absolute trust. Without collateral, your reputation becomes your most valuable financial asset. We call this social capital, and in many ways it is more liquid than cash. Tip number 1 is to invest in your community as if it were your bank account. When you help others rise, you create a market that will eventually support you too. Now we move to the concept of Tzedakah, often translated as charity, but meaning justice. It is the practice of setting aside 10% of income for those in need. Paradoxically, this mandatory giving is seen as a way to increase one's own wealth. It creates a mindset of abundance rather than one of scarcity. If you can manage with 90%, you prove you are the master of your money, not its slave. This leads us to the fourth tip, the extreme discipline of living below one's means. In many Israeli households, there is a profound respect for the shover, or the one who saves. Status is not measured by the brand of your watch, but by the size of your portfolio. This cultural frugality with a purpose allows for massive capital accumulation over generations. Children are taught to see money as a tool for building, not a toy for consuming. This mindset shift is crucial for anyone looking to master their finances. Finally, we look at tip 5, the diversification of risk based on ancient wisdom. The Talmud advises, let every man divide his money into 3 parts. 1/3 in land, 1/3 in business, and 1/3 kept in hand. Even thousands of years ago, the concept of a balanced portfolio was central to survival. But in the modern world, land and business have changed drastically. How do we apply this ancient 3-bucket rule to today's volatile markets? It requires a level of discipline that goes beyond simple math. It is about seeing the world through the lens of generational wealth rather than quick wins. These 5 tips are only the beginning of the Shekel strategy. Behind every successful fund and every thriving family, there is a deeper layer of planning. As we have seen, the community is the foundation, but the structure is built by the individual. However, there is a risk that even the strongest community cannot protect you from. What happens when the system of trust is tested by the ultimate temptation of modern greed? Greed is neutralized not by force but by the rigid structure of a well-defined plan. We move now from the communal trust of the first chapter into the individual's tactical execution of wealth. The cornerstone of this execution is the legendary 3-bucket strategy, a method of dividing one's resources into distinct functional categories. The first bucket is dedicated to liquidity, ensuring that immediate needs and emergencies are always covered by accessible cash. This liquidity provides the psychological safety net required to take calculated risks in other areas of life. The second bucket is your engine of growth, focusing on business ventures, stocks, and active trade. Here, the capital is put to work, demanding constant attention and the courage to navigate market volatility. The third bucket is the foundation of long-term security, traditionally represented by real estate and physical land. Investing in property is seen not just as a financial move, but as a way to root oneself in the community. One must maintain a strict balance between these buckets, never allowing one to drain into the other without a plan. Real estate serves as the ultimate hedge against the erosive power of inflation over decades. In the Israeli context, Owning property is often a family-wide goal, supported by the communal loans discussed earlier. This long-term discipline requires a shift in perspective from personal gain to multi-generational legacy. One does not build a fortress in a day, nor does one build a financial legacy without sacrifice. Every shekel saved today is a brick in the wall that will shelter your grandchildren. Debt is viewed with extreme caution, used only as a lever for growth rather than a fuel for consumption. Learning to live below one's means is the invisible engine that powers the three buckets. We must also consider the role of Tzedakah, or charitable giving, which acts as a spiritual insurance policy for wealth. Giving back ensures that the flow of wealth remains healthy and does not stagnate into greed. Financial mastery is not about the amount in the bank, but the wisdom in the distribution. The strategy requires weekly reviews, ensuring that the three buckets are adjusted as life circumstances change. Even in times of crisis, the commitment to these percentages must remain unshakable. Discipline is the bridge between the goals of today and the legacy of tomorrow. Consider your estate as a garden that requires constant weeding and pruning to flourish. In Israel, real estate is often purchased as a long-term rental, providing a steady stream of passive income. This income is then reinvested, creating a compounding effect that accelerates over generations. It is a system built on the endurance of the Jewish people, surviving through centuries of uncertainty. You can begin this journey today, regardless of the current size of your buckets. Start by identifying your percentages. How much goes to safety, how much to growth, and how much to bricks. The exact numbers may shift, but the commitment to the structure must remain absolute. As your wealth grows, the complexity of your investments will naturally increase. However, the foundational principles of the three buckets will always provide clarity. Wealth is not just about having, it is about knowing how to keep and grow what you have. This wisdom has been passed down through generations, refined by trial and success. By following these steps, you are not just managing money, you are building a future. The struggle of the first chapter's temptation is now replaced by the peace of a disciplined life. Remember that the community remains your strength, and your discipline remains your shield. The Shekel strategy is more than finance, it is a philosophy of resilience and continuity. You are now the architect of your own financial destiny, armed with the secrets of the ages. May your buckets always be full, and your legacy live on through the wisdom you share today.